Good evening, folks. This is Andy Pedraza with Special Effects Academy. We're on June 7th, start of the week review in the Forex trading realm. And as usual, we will be going through our normal agenda as soon as the screen wants to cooperate and changes. Okay, so we're going to be looking at the prior week, our currency strength meter for the past 7 and 30 days, the calendar of fundamental announcements scheduled for this week, a look at the major pairs on the daily charts, any setups we see in progress, and a few words in conclusion. Term ledger, were up or are up for the week about, I'm going to say around 9%. It was a pretty good week across the board. We'll see the other ledgers momentarily. We opened only one trade this week, and it was a quick in and out trade, gave us 50 pips or so. We had an older Aussie CAD trade that gave us the bigger part of the increase for the week, the Aussie CAD long. So right now we are all cash on this account, and I will be fixing that very shortly as the week begins. I do not like to have any of the accounts all cash except for very brief periods of time. So great results on realized gains on the long-term ledger. Intermediate term ledger, same thing. We were in and out of multiple trades. This was a very, very productive week, a trending week, a breakout week. So we are up about 12% on this account for the week. And again, that is recovery. We were coming out of a drawdown, but still it is movement definitely in the right direction. And it was by leaps and bounds. It was, as I said, an extremely productive week. For the short-term ledger, and here you can see how productive it was, we were up 15% on the week in our short-term trading. 11 trades open, 10 of those were winners, and again, it was just amazing how the market moved and how quickly it moved throughout the week. Of course, we have been using a slightly different approach to what we were using before, and that in turn was had been revised from earlier approaches. We never do the same thing. Rather, we adapt to whatever the market seems to be doing at any given time. So obviously, the approach we took is working out great. And at some point, it will stop working this great, and then we'll move on to something else. It's always about adapting to the market, not trying to force the market into a mold. Notes and opportunities for improvement. The market went ballistic this week. As already mentioned, we had strong gains on all three of the accounts. World economies are reopening very cautiously. There is still concern about a second spike in the coronavirus pandemic. So most of the countries are taking it day by day, cautiously reopening, not a full reopening, and with restrictions, seeing how far they can push it before we see any negative results. This, of course, isn't helped by the fact that infections take about 14 days to manifest. So anything done today, good or bad, will not be evaluated until 2 weeks have come and gone. By that point, it may be too late to stop or to mitigate something that is already 2 weeks old or more. Of course, we have rioting and protests in the U.S., and these are spreading across the globe on the back of the killing of an unarmed black man in the U.S. city of Minneapolis. And this has sparked racial tension, not just in the U.S., but across the globe. There are protests going on across Europe. Obviously, here in the U.S., they continue, and in other spots. This also plays into the pandemic fears, as we were supposed to be observing social distancing and under lockdown, and all that all went out the window when it came time to riot, and hundreds of thousands of people hit the streets in some cases, and they're pretty much cheek by jowl. So 6 feet of distance, I don't think so. So in about 2 weeks' time, we'll see if the virus was as contagious as they keep telling us it is. If it isn't, well, that will be a piece of information as well. Oil continues to recover, and silver is at multi-year highs. There was a surprise to the upside in the U.S. labor market on Friday, our jobs report. We were expecting 9 million jobs to be lost. Instead, we gained 2.6 million jobs, 2.5 million jobs. So the experts, and I always put experts into air quotes because I think they're all idiots, the experts were wrong by about 13 million. So that is a huge, huge delta, causing a lot of humor across the board, but also giving a boost to the markets. The stock market, I think, reached new highs on Friday, and there is talk of a recovery already happening. I'm very agnostic, actually not too agnostic. I do think that we're still going to have more market issues and more downside in coming months. But if it goes the other way, well, I'll trade it the other way. I really don't care which way a market is moving. I keep my, well, I'm very vocal with my opinions. I don't keep them to myself, but I certainly don't trade them. I trade whatever the market is doing. So either way, if it goes up incredibly or down incredibly, we're still going to be looking good at the end of the day because we'll be trading it in that direction. In general, the dollar continues weakening, the euro continues gaining strength, and the yen is tanking, which is probably the more surprising one, as I don't understand exactly why the yen is losing so much value. It simply is. And last but not least, our live event at this point, I am thinking September. So I'm thinking sometime in September when the weather is still good here in Pennsylvania. We shouldn't have any snow or hurricanes or heat or anything. It'll just be somewhere nicely in the middle. So I'm thinking as soon as I talk to the venue where I'm holding it, or I decide to hold it in my own venue, either or, I will very likely set a date and start communicating that. And of course, you will all be informed. Moving on to the relative strength meter for the past 30 and 7 days, we have a slight downtick on the volatility on the monthly. We were at 20%. We're down to 16 now. We can see that there are some more movers other than the metals. The metals continue moving well. I already mentioned that silver, the next to last column there, XAG, is doing multi-year highs right now. So obviously, it's one of the bigger movers in this chart. Indeed, the biggest mover. The deep blue color indicates that. Gold dropped, but didn't drop as much as silver went up. So gold is at a little bit of a crossroads. The dollar went down if we look at the monthly and if we look at the weekly as well. So dollar weakening. The Kiwi is doing well. The yen, as I mentioned, is tanking for no logical reason that I can figure out. It simply is. The pound for the monthly is middle of the pack. The euro gained against pretty much everybody except the Australian and the New Zealand. The Swiss gained against the dollar, and the yen lost against everybody else. The Canadian lost against the Kiwi, Euro, Aussie, and gained against everybody else. And the Aussie was a clear winner among the currencies, gaining against every other currency out there. And we'll see on the Aussie charts that is perfectly clear. Moving to the weekly, we see pretty much the same thing. The Australian, the big winner, except against the Kiwi, and they were relatively flat against each other. The Canadian dollar, also a big winner, except against the Aussie and the New Zealand. The Swiss lost against everybody except the yen. The euro gained against the dollar, the Swiss, the yen lost against everybody else. The pound had a nice boost, except against the obvious suspects here, Kiwi, Aussie, and Canadian. The yen, as I said, losing for no good reason. The Kiwi, the big winner for the week, was the deepest mover. Dollar won against the Swiss and the yen, as did everybody else, but lost against all the other currencies. And silver and gold gave up a bit this past week. Our calendar for the week coming up is pretty light. The only interesting thing we have is really the Fed interest rate decision, and right after that, the FOMC press conference. So we will be trading those two events live. It'll be a single session by the time we're done trading the interest rate decision. The FOMC press conference will be starting. So that will be on Wednesday. We will be opening up the trading room earlier than normal, 1:30 or 1:45. I haven't quite decided yet, but I will by the time I send the update out. And other than that, it is regular trading. Moving on to the charts, as we can see, oil continuing to recover once again, heading towards the top. I think it's crossed the middle of the chart at this point, but not by much. There is some concern in the oil sector, however, because a month or so back, the OPEC countries decided to pretty much restrict production of oil so that they wouldn't be selling into a dropping market. So all the countries, including Russia, adopted quotas in their oil production. These quotas are set to expire at the end of this month. So it's anybody's guess how that will affect oil if production is once again geared up in what is still a very, very weak market. Until I see it go above 50, this is a weak market. That said, we're at 39 and change. We're about to cross into the 40s. We'll see if the momentum continues, but it is so far an absolutely stunning recovery, especially taking into account the other circumstances happening across the planet. So it has recovered even with air travel pretty much shut down, people locked up in their homes so they're not driving their cars as much, people working from home, all the stuff that means that gasoline really isn't being used, and still oil is staging a recovery. So we'll see once things go back to whatever normal is going to look like after these events, if oil does continue recovering and heading towards the top, or if we're going to go into a bit of a sideways market, or even perhaps give up some of these gains and have another trip towards the bottom. Time will tell. Moving on to the charts, we can see that there is nothing except bullishness out of the euro dollar. The dollar tanked, the euro's going up. We made a lot of our profit out of this pair and some of the other euro pairs as well. The only, I guess, negative in this chart was on Friday. On Friday, it did give up some of its gains. Why? The labor report. The fact that instead of 9 million jobs lost, we actually gained 2.5 million made the dollar get significantly stronger right after the announcement at 8:30 a.m. And you can see that play out in this chart. Pound dollar also very strong, very much in favor of the pound. And while it did retrace on Friday, it still ended up higher than where it had begun the day. So very, very bullish. We took some profit on the long-term account on this pair, and I would be looking for entries now that the week is kicking off, see if the momentum continues, and we will start taking trades on a lot of these pairs. We do have 8 trades open right now on the intermediate term account. It's the only one with open trades right now. And all but one were at profit when I looked about 20 minutes ago. And indeed, they were at a higher profit than where we ended up on Friday. So the market is already moving, and it's moving in our favor. I have to see if we want to put some money on some of these others. I will be looking at the charts at some point later tonight before the London Open and making a few informed decisions. I may wait till tomorrow, or I may do it tonight. No way of telling. I'm a little bit unpredictable in the sense that I do follow what the market is doing. I don't have any set patterns for myself. It's whatever the market is doing. But of course, if you guys have the copy trader, you will be getting those trades automatically. USJPY, well, you see there's an open trade on this one since it's showing up on the screen. Actually, it's not an open trade. I'm sorry. This is a pending order. So I do have a pending order to go short on the USDJPY if and when it turns around. But from the chart, we can see that it is heading in the opposite direction. Again, not really sure why that's the case, but it simply is. At some point, I do expect the yen to come back into its own. USD Canadian is dropping, and in this case, we do have an open trade, and we are at profit, and I think this is a re-entry, so we had already taken profit prior to that. So we are trading the USD CAD towards the bottom of the chart. That should be logical, just taking a peek at the chart. It's doing nothing but heading down for the past couple of weeks, and again, have to see if that movement continues or not, but it is looking good. USD Swiss is one of the less directional pairs right now. I mean, it was going down towards the end of the week. It started off very flat, or rather going in both directions, but ultimately sideways. On Thursday, it had a huge drop all the way down to support at the 95.50. And then on Friday, the jobs report hit and it went into reverse. So it went all the way back up towards the next level of resistance, not even the immediate one, then ended up the week in between those two. So I'm still bearish on the USD Swiss. I think the dollar still has room to move down. but the Swiss is also facing issues. So all in all, if you force me to trade this pair, I would be trading it down. But since I'm not forced to do anything, I'm just going to sit it out and wait for a better opportunity. Aussie dollar, and this was a long time coming. We had the Aussie dollar up with the ultimate target, the top of the chart. That is where our take profit was originally. I have moved it further away. Indeed, this is actually a re-entry. There was a retrace that took us out at profit, but this chart is now at the very top of the daily and is poised for a breakout to levels of resistance where you'd have to look out at the weekly chart to see them. So all in all, very bullish, very profitable, very productive, and we'll see how much we can continue getting out of the Aussie pairs. As I mentioned when we were looking at the relative strength meter, however, the Aussie pairs have been the big movers, the Australian dollar being the big winner in the last 7 and 30 days. That economy had been very hard hit for years. It had been a bottom feeder, and now it looks like it's staging a bit of a recovery. It still has a long way to go to get back to the price action points or range that it enjoyed 2-3 years back. So if it does stage that kind of recovery, it's just going to be amazing for us. Kiwi dollar, same thing, heading towards the top, but unlike the Aussie, it still is lacking 200, 300 pips to get to the top of the daily chart, and we're already trading it in that direction. A chart that was very sideways for months is now finally breaking out and moving towards the top. This is precisely what we want to look for when we're trading the market. We want to look for pairs that are sideways and be ready for the breakouts in either direction. We don't care which way they go. We just care that they broke out. Aussie Canadian, same thing. It went towards the top of the daily chart and kept going. So it is making new highs, and you'd need to see, you need to go out, zoom out to the weekly in order to see the higher levels of resistance on the way up. There are many. This is a chart that can still go a long way up, but on the daily, it looks like it's overextended. Don't let that fool you. It can still continue going up. Zoom out to a weekly and you'll see all the room there is for this pair to move. Open trade here as well, also a re-entry, and this is our one negative, I think, as we ended the week. We got in when it broke the highs and it retraced on Friday, giving us a very slight negative. But as I said, it was a re-entry. We had already taken hundreds of pips on the trade just the day before. And indeed, this one can produce again as well. So it becomes a waiting game. Euro Swiss breakout, finally forcing me to take the trade. I had ignored this one for a while because I didn't believe it could do what it's doing. Finally, it broke the resistance level. I was waiting for his confirmation. We went in. I think we were carrying 100 plus pips when the week ended, and it's still looking good for a continuation. Again, with Euro strength and Swiss weakness as the background behind the trade. And I also have a pending order in place to take us in short in the opposite direction if it does start turning around. So we've already made money on the way up, and if it turns around, we'll make money on the way down as well. Next, our euro pound, reasonably flat pair. In the past few weeks, it did go up to a higher price point, establishing a higher sideways channel, and it started bouncing between resistance and support there. It ended up the week at the new level of support, didn't manage to break through and give us an entry. We do have a sell stop in place at the next level to take us in if we see a turnaround. Until then, we will be observing it. Euro JPY, another one of those breakouts that are a little bit puzzling to me, but we don't care. We just trade it, and we are carrying a nice chunk of profit on this one as well. And also looking for a turnaround. When that turnaround happens, it's probably going to be brutal. So I do have pending orders in place to take a short if we see it making a U-turn. Euro CAD, very flat, finally took us into a long-running pending order. Or I decided to sell it out of impatience. I forget which one this was. Either way, no, I think I adjusted the pending order moved it higher as to take us in earlier. Anyway, we are carrying a bit of profit on this one. And of course, this is not a safe trade until it does break support at the 150.50. At that point, I would say we're pretty much home free. But until then, we're waiting for that to actually happen, with the ultimate target being at the bottom of the chart. This is a very sideways chart, has been for months now, since March. Eventually, it's going to break out in either direction. And again, we don't care which one. But for now, I'm cautiously putting money on it breaking out short. Pound JPY breaking up, up in a way. This is another one of those that I really don't trust. I think we're going to have a turnaround on the yen, and I do have a pending order in place to take us in short if when that happens. This is one of those that even if it keeps going up, I really don't want to trade it up. I may say that I don't trade my opinions, and I'm not trading them, but I do reserve the right to not take a trade if for whatever reason I don't like it. So there's that. Aussie JPY, another one breaking out of the top of the daily, and we've been riding this one up for quite a while. We finally took profit last week and then re-entered the trade when the retracement didn't last and started going up again. So this is a re-entry trade, and we're trying to trade it to newer highs that, again, can only be seen by zooming out to the weekly. We'll see the higher levels of resistance there. Euro New Zealand finally breaking out of its rather wide sideways pattern, hitting new levels of support at the 173. If this continues, I am probably going to start putting money on it. But I do think, opinion again, which I don't trade, but I definitely keep an eye out for the opportunities based on opinions. We might see a turnaround, and this one heading back towards the bottom of the Kumo, which would give us hundreds of pips of opportunity. So either way, I'm probably going to end up trading it, but I'm going to wait for the week to begin to tell me in which direction. Pound Canadian is probably the flattest chart on the in the deck right now, so pretty much set it at ignore. We did get taken into a trade somewhere on the Pound Canadian when it tried to break out. I think we took a very small loss when it retraced, and again, we live to fight again, and we'll be back to this chart once it does break out. Anytime it breaks out, we'll probably take the trade, and eventually we will be handed a reward. Pound Swiss is finally breaking out towards the top, so Swiss weakness more than anything else. It did give us a new high on Friday before popping right back down to the previous highs where it ended the week. Another one where I might put some money into it if I like the way it's moving, but I'll wait for at least the first 24 hours, or maybe at least until the London Open at 3 a.m. So either or. I will take a look at most of these charts overnight and see if there's any opportunities we want to take or any pending orders that we want to add to the deck. That is it for our charts for the week. Setups we see in progress. Of course, the big factor remains the coronavirus, but we already see other factors popping in. In the case of the UK, another Brexit deadline is set to expire, where they should have had some accord with the European Union after other. If you remember, Brexit did happen, but what happened really was that finally a drop dead date was set for Brexit, and they no turning back. So now there's really no way to undo what happened, but there are a lot of negotiations going on regarding what the new relationship with the EU is going to look like after the final Brexit bell chimes, and really a final date when all these things will be put in place. So how is trade going to happen between the UK and the European Union? What happens to the borders between them, especially the prickly one being the one with Ireland, because Ireland remains, it's sort of halfway into the UK, halfway into the EU. So it will continue operating as sort of in-betweener there, which means that there will be a walking border, a border you can just hop over. walking, jumping, driving, whatever, between the UK and Ireland, which means a land border between the UK and the European Union. And they do not want controls in place because that would violate a prior peace agreement when Ireland and the UK were having the IRA issues, pretty much terrorist attacks every day. So it's a very sore subject in the UK, and part of that was supposed to be resolved or at least discussed, and it doesn't look like that's happening. Looks like the deadline is going to expire with no changes, nothing new to report, and this is going to be a huge setback for the UK going forward, and probably causing issues internally with the different constituencies. So that's coming up for the UK. That may, of course, impact the pound as well. We'll see, but that is a factor above and beyond coronavirus. We do have, of course, the general economy. We are the strongest economy, I would say, on the planet based on size and productivity. The economy has taken a huge hit with the coronavirus, but at the same time, last week's job report gave a different outlook. It looks like a recovery may be happening early, or maybe this was a dead cat bounce. I don't know. Nobody can really quite explain it, but we're still not out of the woods. So the economy is definitely going to be a factor with dollar. We've seen the dollar weakening, and of course, the riots and overall civil unrest right now aren't helping. Australia, Japan, really the coronavirus is the main issue. Japan, as I mentioned, weakening for no good reason at all. It just is. And of course, the EU did release a stimulus package exactly a week ago, Sunday of last week, which in very great deal explains the strength that is coming into the euro. The stimulus package that was forwarded by the EU seems to be very well received by the market. So that's that. So that's where we are in the general setup. So again, we're trading. There is no really long-term outlook right now. We're taking it day by day and taking advantage of any significant moves that do happen throughout the week, months, or whatever. And that's pretty much it. My final words here, I always try to leave a few words of air quotes wisdom here for anybody listening. But my words today would be to trade the market. Don't let the market trade you. And I say this a lot, but I noticed I said it even more last week. I all the time, man, I really hate this trade, but look at all the money it's making. So it doesn't matter if I like a trade or not. I will trade it because I am trading a system. If you're trading your opinions, your gut feelings, or anything other than when X happens, do Y, you are going to fail at trading. You're probably going to fail at a lot of other things in life, but specifically, you're going to fail at trading. It might take a while for you to fail, or it could be as quick as a safe falling on your head, but you will fail if you don't have a system behind your trading. If you still think you can predict the market, well, I still have that bridge in Brooklyn that I've been trying to offload for quite a while. The sad thing is that there's many out there claiming that they can predict the market, and just as many idiots willing to follow them and give them their money. Don't be one of them. I don't care if you follow me or not. That's not the point of all this, but don't follow some idiot out there who's pretending to have a crystal ball. The only way you can win in the market is to have something that tells you when X happens, go on or short, as the case may be, period. There's nothing else. That is going to be the end of this session. Any comments or questions from anyone? Okay, then I thank you very much, and I will see you guys tomorrow in our regular first session of the week in the evening. Have a good one.